CPA prepared financial statements. What you should know about them today on the Daily Is Show.
5, 4, 3, 2, 1, 0, ignition, liftoff.
Boom, boom, chicka, boom, boom, chick, chick, boom, boom, chick. Hey, everybody. Welcome to the Daily Is Show, a show not just for rental housing providers, but a show for anybody looking to be a little bit more time wealthy, especially for you small business owner-operators out there. This show is dedicated to you because, quite frankly, I know how difficult it can be. I know what it feels like to be time-weary, not having enough hours in the day, not enough control over your calendar. Really, anybody that's looking for white space on their calendar, this is what your show is dedicated to you specifically. You time warriors out there, those who your entrepreneurial fire is burning in your belly and you want a life better for yourself. Well, this show is for you guys specifically. My name is Mark Dolfini, your coach for the next 9 minutes or so. And what I want to talk about today is specifically financial statements, CPA prepared financial statements to be exact. And those of you who are thinking, well, what does that mean? Are you talking about taxes? No. Actually, CPAs don't actually have to be a CPA to actually do your taxes. You can be certified tax professionals and all that stuff. And I don't want to get into that. What we're talking about specifically is types of financial statements that a CPA must do. You actually have to be a CPA to do this. And there's 3 different levels of CPA prepared financial statements. That's what I'm going to talk about today. And this is something that you should know about, especially if, for those of you who, whether you're wanting to be in the real estate business or not, but if you're in business for yourself and you're going to go to a bank to ask for funding, right? You're going to be going to the commercial lending department. And this is why it's important for you to know this type of thing. So if you're going to be borrowing, let's say you plan on building an apartment building, right? And you want to get funding for that. Well, this is what's going to be important, is to understand why they may ask you for different types of financial statements. So not talking about balance sheet and income statement. Those are 2 different types, 2 different formats. But what I'm talking about is when you have a CPA compiling or putting them together, basically, excuse me, when you have I'm out of water, I didn't plan on that very well. When you have someone putting together your financial statements, putting together your balance sheet, putting together your income statement, the bank is going to want to know, like with reasonable assuredness, that these numbers were put together by a professional and not just you that's saying, yeah, I'm sure, of course I'm worth $30 million, $100 million. Absolutely, right? Well, they want some reasonable assurance that this was put together by an outside professional. So let's talk through that. So the 3 different levels of financial statements, and this is more of like a level of professional approval, if you will, is the first level is a compilation. The second level is a review, and the third level is an audit. Okay, so again, compilation, review, and audit. We're going to go through each of the 3 for the next few minutes. A compilation is just like that. It's just compiling the data. That's all it is. They're not testing anything, and again, this is what a CPA will do. They're not testing anything. They're just taking your numbers and putting them in a format that is in what's called GAAP, Generally Accepted Accounting Principles. They're putting them in a format that is recognizable. Okay, so that way, even if you have no earthly idea on what a balance sheet is supposed to look like or an income statement is supposed to look like, they're just going to take your data and put it into that format. That's basically it. They're not testing anything. They're not interviewing anybody. They're not checking bank accounts generally. It's the broadest scope in terms of a CPA prepared financial statement. Okay, so it's just a simple compilation. As a result, there's really no assurance that the CPA will not provide any assurance that the numbers are correct. It's just basically saying, here's the numbers we were presented. This is what we're giving you, right? So it's a compilation. The second level is a review. Now, the difference between a review and an audit is pretty substantial, but how far the review goes is going to be dependent upon really the CPA. Now, I'm sure that they've got standards in terms of what they use within their industry of how far should a review go versus how far an audit would go. But, honestly, a review is basically just a simple and limited review of the numbers that come in. They might do limited testing of the key financial numbers, right? They may, if there's a number that's sticking out to them that say, yep, we've got $5 million cash in the bank and you have a $100,000 real estate portfolio, probably going to want to check the $5 million in cash to make sure that that's actually a real number, right? So they're probably going to be looking for outliers. They're probably going to be looking for numbers that maybe just stand out to them, especially based on your whatever industry you happen to be in. Let's take real estate out of the equation for just a second and say you happen to be a roofer. They may say, boy, it's really, really strange for a roofing company to have, $3 million in the bank, right? Let's just look into this a little bit better, especially if they've only done maybe 5 million in sales each year for the last 3 years. Like, that would be something that would be a little bit of a red flag. Why do you have so much cash in the bank? And let's review this, right? So they're going to look at probably outliers. They're probably going to do a limited testing of of internal procedures, but they're not going to go really that deep into an audit. So they do provide a limited assurance, but they don't go much deeper than that. The full Monty, if you will, is an audit. Now, an audit is where they are testing. They're not testing everything. They're just testing the material things, because especially in the case of like a very, very complex organization where there's lots of different, tentacles that are being fed in lots of different ways, it's hard. It would be almost impossible to test every line item in an income statement and balance sheet. It would be too time intensive, right? Especially when you have potentially hundreds, if not thousands of transactions being generated every single day, sometimes every single hour. It would be impossible to test every single one of them. And they're not always material, right? Materiality means it may not be a high enough number for it to warrant really looking that far into it, right? So they definitely use materiality, but they're also, and I'm not getting into the basis of auditing, because auditing is definitely that's a statistical, it's a conversation about statistics. They're going to basically just do a statistical sampling of certain accounts, just testing them, making sure that they're right, that they're correct, that they're viable. And if there's no other thread to pull on, they're not going to go much deeper. If they find something that's funny or something that's wonky, they may go a little bit deeper into that particular account. They go, that one's wonky, that one's not true. Let's go a little bit deeper and see if we can find anything else, right? But that's generally it. So they will test internal controls. They will test internal procedures, meaning that they're going to say, hey, they're going to interview people and say, hey, when you get a cash payment in, tell us how you handle it. They may watch about how people are doing their jobs, that sort of thing, to a certain degree. So an audit really is a peeling back of the layers of the management and the financial health of the company. So when whether it's a review or a compilation review or an audit, a CPA is going to provide an opinion based on what they found, right? Now, again, there's really not much of an opinion on a compilation. They're just going to say, yep, here, it looks right. It smells right, right? With a review, they're going to go, yeah, we're going to give you a limited assurance. Everything kind of looks like it's right. We did limited testing here, and then this is what we found. We feel like it's reasonably accurate. With an audit, they're going to give a full assurance, like, yes, the numbers here are accurate and are representative of a similar company in that same industry, et cetera, et cetera, et cetera. So why this matters is, especially I mentioned about your banking person earlier on, that if you are asking a bank for money, don't be surprised if they're going to ask you for reviewed or audited financial statements. And the reason I'm telling you that is because you have to be prepared for paying for something like that, because they can be in the thousands, if not tens of thousands, for a full audit. So that is all I have for today, folks. I know that sometimes you get a little bit some crazy questions like this, but if you'd like to reach out and ask me some more questions, you can always reach out. Just drop me an email at mark@landlordcoach.com. Always happy to talk to you. Or if you'd like to schedule a full 90-minute session, just reach out landlordcoach.com/connect. I'd be happy to talk to you what coaching looks like and so forth. But that is all I have for today, folks. Please be sure to place a value on your free time, because if you don't, someone else will. And most important, there is no amount of money that will make time irrelevant. Have an awesome day. I'll catch you guys next time.